Iran just agreed to a ceasefire 90 minutes before Trump's deadline, and futures are ripping. S&P futures up over 2%. NASDAQ up almost 3%. Russell small caps leading at plus 3.2%. Oil is crashing. WTI down 14% to $96 a barrel. That's the biggest single-day oil crash in nearly 6 years. Here's the deal. The Strait of Hormuz has been basically shut down since the war started February 28th. That pushed oil from $65 to over $115, a $35 to $40 war premium baked into every barrel. Pakistan brokered the deal. Iran says they'll reopen the strait to marine traffic for 2 weeks while they negotiate. 2 weeks, not a peace deal, a pause. Formal talks start Friday in Islamabad. But the market doesn't care about permanence right now. It's repricing the war premium out of everything. Airlines surging, energy dumping, tech ripping higher on inflation relief. This is a full macro rotation. I'm Marcus. I break down the pre-market every single morning before the bell for momentum traders. If you want this delivered to your feed before 9:30 every morning, hit subscribe. Let's get into it. Quick reminder, nothing I say here is financial advice. I'm just breaking down what I'm seeing this morning. Always do your own research before you put money on the line. Yesterday was a nothing burger. Markets drifted sideways all day, waiting for the Iran deadline. S&P barely moved, up 0.08%. Volume was dead. Everyone was sitting on their hands. Then the ceasefire dropped at 6:30 p.m. and the real move started after hours. That's what we're trading today. All right, let's talk tickers. 3 names worth your attention this morning, starting with the highest conviction play. DAL, Delta Airlines. This is a dual catalyst monster this morning. Catalyst 1, the ceasefire is crashing jet fuel costs. WTI down 14% overnight. Catalyst 2, Delta reports Q1 earnings before the bell at 6:30 a.m. Consensus is 62 cents on $14.9 billion in revenue. Pre-market, Delta is at 73.50. That's up 9.5%. Volume is 8 to 10 times normal pre-market. That's not noise. That's real institutional interest. Fuel is the biggest variable cost for airlines. A $16 drop in crude reprices Delta's entire earnings trajectory for 2026. The key level is 76.39. That's the February high and the 52-week high area. Here's how you trade it. Wait for the earnings report. If Delta beats and raises guidance citing fuel tailwinds, that's your green light. Entry above 76.50 on a break of that February high with volume confirmation. Stop at 73 below the pre-market support. Target 83 to 85, measured move from the base. That's about 2.5 to 1 reward to risk. And honestly, the options market was pricing a 9.4% implied move with heavy put hedging. If the stock gap's above 76, those short puts unwind violently. Gamma squeeze potential here. But, and this is critical, do not buy the gap blind. Wait for the earnings number. If they disappoint, this fades hard. Number 2, AAL, American Airlines. This is the aggressive version of the airline trade. Pre-market at 1680, up 11 to 12%, volume 6 to 8 times average. The catalyst is the same ceasefire and oil crash. But here's the thing, the AAL is the most fuel cost sensitive major airline. Higher leverage, weaker balance sheet. It was down 18% since the war started. That makes it the highest beta reversion play. Analysts are saying if oil stays below 95, airline Q2 and Q3 earnings could produce some of the largest beats in the history of the industry. The trade, entry on a break above $17 with volume in the first 30 minutes. Stop at 1580 below the gap zone. Target 1 is 1850, the pre-war resistance. Target 2 is $20, the January highs. That's about 2.3 to 1 to the first target. Not bad. But I want to be direct with you. AAL is the most volatile airline in both directions. If the ceasefire collapses, this sells off first and hardest. Size accordingly. Half position versus what you'd normally trade. This is high reward, higher risk. Number 3, and this one is on the short side, Exxon Mobil. Pre-market around 153 to 155, down 5 to 6%, volume 4 to 6 times average. The ceasefire is an unambiguous negative for energy. The war premium drove Exxon from 115 to 163 since February 28th. Now that premium is leaking out. And this isn't a one-day move. If the ceasefire holds, energy faces weeks of derating. Key levels. 155 is March support. If that cracks, the next stop is 148, the pre-war breakout zone. Below that, you've got 140, the 200-day moving average. That's the big magnet. The setup, short below 154 if that 155 support breaks in the first 30 minutes of the cash session. Stop at 159 above pre-market gap resistance. Target 148, then 140. That's about 2 to 1 on the first target. Now, Exxon's fundamental business is solid. Permian Basin, Guyana, this company isn't going to zero. Short it for the trade, not as a long-term conviction position. Respect the stop. If you want a sector-wide expression, you can also short XLE, Oxy, Chevron, Diamondback. They're all gapping down together. Two things on the calendar that matter today. First, Delta earnings at 6:30 a.m. We already talked about this. If you're trading Dale, that report is your trigger. Don't front run it. Second, FOMC minutes at 2 p.m. These are from the March meeting where they held rates at 350 to 375. What you're watching for, any dovish language about cutting rates if the economy weakens, that would amplify the morning rally. Hawkish inflation concerns could cap gains. The market is pricing 60% odds of a rate cut by year end. That number just moved up from 45. Okay, here's the bottom line. This is a textbook macro rotation day, money pouring out of energy into airlines, travel, tech, and small caps. The 9:30 to 10:30 window will be explosive. That opening rotation will produce the biggest moves of the day. But remember, this is a 2-week ceasefire, not a peace deal. If Islamabad talks fail, that war premium snaps right back. Size for that uncertainty. Defined entries, defined stops, cut losers fast. That's your Wednesday morning. Be smart out there. Don't be an idiot with your money. And I'll see you tomorrow.